Good afternoon and welcome to the conference call of Motherson Sumi. It's my pleasure to report that our sales are up 36% and EBITDA is up 21%. All other parameters are showing a very strong growth. We have a lot of new plants that we have shown. This time 9 new plants in different stages have been shown. And I open the house for the question and answers, please. So please go ahead.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question from the line of Kapil Singh from Nomura. Please go ahead.
Hello, sir. We had mentioned in the presentation that there is a impact of some 15.7 million euros on SMR revenues because of forex. So can you indicate, is this translation impact and what kind of impact would have flown through to EBITDA because of the same factor?
Gauba, could you please take that?
Yeah, no, thanks, Kapil. I mean, this is something because the euro has strengthened vis-a-vis US dollar and other emerging market currencies. So if we were to translate the revenues using the same exchange rate as Q3, then the sales would have been higher at 15.7. Similarly, in percentage terms, similar in absolute value, the EBITDA for the quarter would have also gone up. But we have not done the working of that separately, but we can take that offline and give you that. But in absolute value, the EBITDA, because of the geographical spread out of the SMR business has, in absolute value is reported lower compared to same period last year because of the exchange.
Okay. Thanks, sir. I'll discuss it in more details offline. Second, I wanted to check, is there a lead lag between the commodity price movement and what realization we get from the customer? And roughly how much lead lag would be there, if at all?
Hi, this is Pankaj here. Generally, it's 3 months to 6 months.
Okay. So, and for our cost purposes, whatever is the current commodity price, that should be the commodity price flowing through in the P&L, right?
Yes, that's correct.
So the cost sometimes gets covered over a period of 3 to 6 months.
Yes, that's right.
Okay, understood. And last question, there is also a mention in case of PKC, there was a negative impact due to suppliers' material availability. So you can give some color what exactly happened and what kind of impact is there. And also on PKC, just the growth outlook, especially in China and Europe as well. We can read that there were some delays. So if you can just talk about that as well. Thanks.
All right, thanks, Kapil. Regarding the issue at Europe, this was relating to suppliers' ability to supply the components. And due to those disruptions, because the volumes have been going up in the market for various makers, and that inability resulted in additional freight costs, expedited freight costs, as well as overtime. So the labor costs go up and the freight costs were impacted. So that's the impact. So the ramp-ups and the normal supplies get disrupted and the efficiency gets impacted. So that was the impact in the last quarter. And in terms of the growth outlook, as we have seen that the global truck market has done very well. In North America also, the heavy truck market has grown up by 40%. In Brazil also, we have seen good growth. We saw good growth in Europe as well. Although if you look at the entire numbers, they may not reflect, but then in terms of our growth to our customers, there was very good growth and then completely new truck lines being ramped up there. In China, we are working with our joint venture partners, and as we reported, the second joint venture, which the company had reported full numbers for the first time in this quarter. And we continue on a good path, so the China market is also showing good growth in the coming times, and as shown in this quarter as well.
So any indication you can give on the cost impact which was there because of this additional cost that you had to incur, and whether it has been resolved now?
We have not, given a number to that. There are, as I told you, that there are so many different parameters and including the overtime costs, including expedited freight costs and other things. So we are not giving a number to that, but it was, a few million euros plus.
Okay.
And also, Pankaj, if I might add, it is Motherson's consistent policy that whenever we take over a company in acquisition and things like that, we will clean up. We will make sure that everything is followed the way conservative as we are. We will follow all that. So there is a lot of things that are happening, and it is important to do that because it is important to clean up your house, because the older company was running it their way. We are running it our way, and our way is a true, tried, trusted way. So we will follow what Motherson believes in.
Okay, sir. Thanks. I'll follow up in the queue.
Thank you.
Thank you. The next question is on the line of Sonal Gupta from UBS Securities. Please go ahead.
Hi, good afternoon. Thanks for taking my question. So first, some questions relating to the numbers. We've seen in this quarter the numbers have, on the interest rate are much higher on a sequential basis. So could you just talk about that? Is there any?
Sonal, there is no change in the borrowings or the interest rate structure. It could be just because the rate of consolidation in euro terms has changed.
So most of your debt is euro denominated, right?
That is true.
Okay. And so again, on the minority interest also, we've seen a sequentially on a quarter-on-quarter basis also significant jump. So any color on that as to what's happening, what is driving that?
As Pankaj also mentioned, and we have joint ventures in China as well as joint venture in Spain at SMP level, and which has been growing, and that is being consolidated as a subsidiary from 1st January. So there is a incremental profitability also coming from the joint ventures.
Okay, because if I see, SMRP BV numbers, I don't think there is sort of like a significant increase in minority interest out there. So I was just trying to understand.
As I said, it is on account of combination of the two factors, including the joint ventures at PKC as well, and also the euro consolidation rate. We have in PKC also the joint ventures in China now. So that will also have a addition to minority interest coming in addition to SMRPP.
Okay, sir. And so just lastly on the number side, just on the again the amortization number. I know I've asked this in the past as well, but so we did see, earlier, like in Q1, you had said there's a 42 crores amortization which will run for 10 years at PKC. Now, in Q2, that number got revised up for Q1 as well. So I just want to understand, is there a revision to that 42 crores number, or do we still stick with that 42 crores, and this amortization number, which is now at 72, 73 crores, is because of other factors as well?
No, 42 crore is the incremental number when we have taken over PKC. but there was already a number which was there in PKC, which was being written off at PKC level. So when we are doing an accounting presentation, then all the amortization, whether it was in PKC or in SMP, a very small amount, as you can 4.87 crore in the same period last year, will get lined up under one row item. So, but at the same time, the purchase price allocation will be finalized within this month, because under Ind AS or IFRS, you have to do it final PPE allocation in a period of 12 months. So you will have a complete details in the annual printed balance sheet on this as well, as we had given similar details last year on a provisional basis.
Okay. Thanks, sir. I'll join back the queue.
Thank you. The next question is from the line of Hitesh Goel from Kotak Securities. Please go ahead.
Thank you for taking the question. The same, sir.
Hitesh, may I request you to come closer to this mic, please?
Hello.
Oh, yeah.
Yeah. Sir, basically it's the same question that Sonal asked. Basically, if I look at the minority interest on a YOY basis, it's gone up substantially, and the euro depreciation, INR depreciation versus euro is only 6.5%. Whereas if you look at the sales in China for SMR, PV, it's not grown, and PKC also, if you look at profitability on a YOY basis, is down. So can you just explain this more in detail? Is there a one-off item income here because of which, or this is a normalized number we should look at?
PKC also has a joint venture in China, and we have already mentioned in the note also that the second JV in China has been consolidated for the full quarter. So the minority interest is coming from PKC as well as coming from SMRP BV.
I think, Gauba, I think, just one moment, please. Are you referring to the shareholding change in SMRP BV between Motherson Sumi and SAMIL? Is your question related to that? Because there is no change. The ownership is the same as it started right in the beginning, say 3 years ago. It's the same. Is there anything else that you're referring to? So speak up clearly, because the minority interest in Motherson Sumi Systems, because the partnerships of China are so if you can elaborate your question better, it would be better place to answer it.
Yeah, so sir, what I'm trying to say is that on a YOY basis, if you look at the minority interest, it's increased by 50%. So have the JV profits of PKC and SMR PV in China, the profits have gone up 50%? Is that the reason? Because there's some obviously translation impact, but that is what we wanted to understand.
Sorry, Hitesh, there are two answers. Number one, I had answered compared to the same period last year, in December 2016, and now we are consolidating one more joint venture at SMP as a subsidiary.
Oh, okay.
There is a full disclosure in all the quarters at SMRPBV as well as at Muscle.
Oh, okay.
So Sonal question was sequentially from last quarter to this quarter. So these are accounting numbers, and these are coming from a limited review audit report, as well as have been done by us very meticulously. So whatever, if you are asking a question, please be more elaborative so that we can understand the question better.
Okay, sir. My second question is, sir, regarding the startup costs. Now that the Hungary plant will most probably come in in fourth quarter, right? So how should we look at the startup costs? Will it start coming down materially in FY19? Because there's only US now, right? After that.
So I'll just try to answer this question. See, once we inaugurate a plant, there is a time lag between the actual production and things like that. So there is a lot of costs that are there, trials, new things are happening, and all those particular things. So while we write it off in our profit and loss account, we just give you an indication that, look, this is the kind of startup cost that is there. And this startup cost is not that we are increasing our profitability. We're just showing you that we've already written it off in our profit and loss account. Gauba, can you explain that a bit further to him?
Yes, sir. This disclosure is being made as an additional information, but when we are calculating the EPS or when we are reporting our whatever profitability is PAT level or PBT level at consolidation, these are not being shown as NRI or any other classification. These are being grouped under the respective heads as if it is a part of the cost. And these costs are shown only for the plants, greenfield plants, which have not yet started a serial production. So we are growing in all the plants, we are growing in all the businesses, and in fact these relate to only the 2 plants which are referred to our various calls.
So my question was that in FY19 this number should be substantially lower, right? Because once you start production at Hungary, the startup cost will not remain. Is that right way to understand it?
See, while we do not guide on the future, but at the same time, this will not be, this will become part of the operations, and there will be revenues also coming from these plants.
Okay. Okay. And so my final question pertaining to the raw material cost increase, you said in your contract, this is actually to Vaman, is there, because way I understand is globally how contracts work with suppliers and OEMs is that you have to bid for a part, right, when you bid for business, and there's productivity improvements that you have to give every year over the model cycle. And some OEMs may give raw material cost increase, some may not. Can you just tell us how this process works globally with the vendors and OEMs?
Just a question. Why do you refer this to Vaman? I didn't understand because neither Vaman nor me are operational guys, but is there a specific reason you're referring this to Vaman? Oh, okay. Anyway, Vaman, please answer. Yeah.
Okay, sure. Look, there's no such thing as a global standard. Each customer does have its own ways. The picture is quite different globally. But usually, again, because it's a long-term contract, we get a 5-year contract. There are clauses in there where we try to take away the movement of things that are not in our control. So the customer appreciates that we do put in clauses with the raw material movement. If after a certain level, it's different with each customer, goes over or under a certain level, the price adjustment does happen. That happens in a little bit of a lag, but like a 6-month lag or definitely more than a quarter. But the customers do want that this noise vibration, which that comes because of the forex moving, which is neither their control nor ours, gets settled after a quarter or 2 quarters. The productivity improvements that you talked about, they are fixed. They are fixed and they have to be given. But of course, like I said, they will be taken into impact with the forex movement. And then when you do the final negotiation at the end of the year, you've seen how the entire year has happened. You have a chat with the customer. But it's not only that. We also talk about the volumes. We also talk about the changes that are coming in. So there's a lot of possibility to make sure that we maintain, in fact, improve what we deliver on those programs on a 5-year basis.
Thank you. The next question is on the line of Avay Shankar from Motilal Oswal Securities. Please go ahead. I'm sorry, Avishkar from Motilal Oswal. Please go ahead. Your line is unmuted for question. Seems there's no response. We will move to the next question. That is on the line of Kapil Singh from Nomura. Please go ahead.
Yeah, hi, sir. Just a technology-related question, sir. On the electric vehicle side, how does that impact the wiring harness business in terms of content that Motherson as a group can offer from what is there in conventional cars?
Pankaj, can you take that?
Yeah. See, there are different concepts, but generally the content goes up, and that's what we have seen. We are supporting our customers wherever they are going in EV, whether even globally through PKC, whether it is the buses or the trucks. And so we are fully there with all the customers in different segments.
So can you give some more color, like what exactly changes which helps the content to go up? I think current etc. is higher, so or electronics.
So it depends. So at the moment, there's a lot of talk going on between the car makers as to what voltage and at how many amps are they going to drive their engines. It depends upon the body weight and a lot of things. So there are technologies which are today at 72 volts. Just for your information, your car that you drive is at 12 volts. And I think the max amps that your car would be consuming would be 40, 45 amps. You might have a circuit breaker for 80 amps. But the electric car, if it is working on 72 volts, goes up to 200 amps.
Right.
So 200 amps, if you by mistake touch the wire, you'll become ash. I mean, you won't even burn. It's instant. You're ash. So
Right.
there are a lot of challenges in the wires itself. The wires are thicker. They have to be that much more protective. The components are different because if you see the charger for the cars, it's like almost like a revolver going deep inside, so that by mistake also your finger should not touch the contacts and things like that. So there are multiple challenges which is there. So you have to specify whether you want to talk about 72 volts, 48 volts. What are you talking about? Because you can't generalize this.
Okay.
Pankaj, correct me if I'm wrong.
So that's right, sir. So there are different methodologies and different ways on which different makers work on a long-term basis in terms of the infrastructure, in terms of the methodology which they are taking.
Sir, what is the range of increase that takes place, say, in 48 volts or 72 volts from current levels?
So as far as we are concerned, we are supplying the wiring harnesses to the passenger car makers in India. Outside India, we have been supporting the bus makers and the truck makers. And so far, if you ask me, that kind of the rate of electrification of these vehicles has not been much. Buses, of course, have been in some places in the cities, they have been going electric. We are not only doing buses, but we are also supplying to the trams. We are also supplying to the metros and to the trains, so electric trains. So that's what is rolling stock business all about. So PKC had a long experience in delivering those kind of solutions and using those kind of high voltage cables. The delta when we look at is not just because of a change from a vehicle which is like a bus which was on a petrol and then going on to electric. So there are different features which also get added, and the kind of vehicle which then it becomes is very different. So it becomes a little bit different, but I mean, if you want to ask me, is there a delta up? Yes, definitely the delta is quite a lot.
Okay, sir. But nothing that you can say quantify in terms of range?
It's not, it's not just one thing to another. So if it is just same to same, I mean, same vehicle and you are changing it over, then one can visualize that, but it was not like that.
Okay. Okay, sir. Thanks.
Thank you. We have the next question from the line of Binay Singh from Morgan Stanley. Please go ahead.
Hi team, thanks for the opportunity. Just two questions. One is a follow-on. You mentioned the supplier issues in PKC. I'm sorry I may have missed this, but are they resolved now, or when do you expect a resolution on that? That's the first question.
Yes, to a great extent the supply chain is resolved, but I mean it's like not 100% resolved, but it is I can say 95% resolved.
Okay, thanks for that. And the second question is in SMR. You added this comment that steady growth in all markets except Asia, which I believe you are referring to Korea. The Korean market was down sharply in December quarter. So could you comment a little bit about the overall growth that you are seeing, and is it the Korean market only which you are highlighting over here?
So the Korean market and as well the Korean cars in China. But Vaman, I think you'd better take this.
Yeah, Papa. So look, I think you have to understand that Motherson is focused on a 3CX15 policy. We try to make sure that no country, no component, no customer more than 15% of our business. There will always be times when, one quarter or a couple of quarters where one country or one customer, those particular models which we are on, they are not doing well. So it's very hard to kind of generalize because we are so spread out and we have been able to diversify the business so well that you can see that the sales are up, even though some regions and again some particular models and customers may not have done well. So that happens, but at the same time, you look at, for example, commercial vehicle has grown 40% in the US market, which is in the last quarter as an industry as a whole. So
Europe
always ways that yeah. So even like Omar said, even Europe is up. So that always counterbalances. We don't go too deep into in a quarter basis. I don't think there's anything there that is alarming for us to be careful about one particular country or something like that. These are product mixes things. These are launch things that happen, changeovers. So the results have been very, very heartening, and I really don't think there's any concern in any of the other regions.
And Vaman, I'd like to add one thing. I think people forget that in 2009, March, when we bought SMR, at that time the top line of the company was just 500 and some million euros. In a matter of 8 years, this thing has grown by almost 3.5 times to 1.8 billion. So at the end of the day, you have to look over a longer period of time. You can't just look at a quarter and say that. As we know, because of the Korean American missile defense system, China actually had boycotted almost to buy the Korean cars. So they've had a lot of trouble over there. But anyway, these are things that sometimes countries do. We're okay. We take it in a stride. It happened 4 years ago, 5 years ago about Japanese cars also. So it happens. But it's something that we, as Raman said, we don't get bothered by.
Right. Thanks for that, sir. And just one question for Mr. Guaba. So what should we take as the tax rate on standalone business going ahead?
I mean, it depends on the finance minister's budget came. For me to guide on the tax rate of India will be unfair.
No, just for your, given the current taxation, so how would you look at the tax rate next year?
No, most of the income is taxable. We don't have any subsidies or those things in India. So you make money, you pay taxes. So we would like to pay more taxes, make more money. But to guide on an X percentage would be difficult.
Well, the reason I asked is that the number sort of varied a little from 28 to 33, so that way.
We do follow certain accounting policies wherein we charge certain expenditure to P&L account even if it is not tax deductible. So that could probably be the reason, but again, guiding on a current tax rate is very difficult.
Great. Thanks a lot, sir. That's it.
Thank you. A reminder to our participants, anyone who wishes to ask a question at this time, they may please press star and 1. The next question is from the line of Jinesh Gandhi from Motilal Oswal Securities. Please go ahead.
Hi, sir. Just one question to Mr. Gauba. With respect to the tax which you have reported, this is after adjusting for 49 crores of reversal, right?
That was in the previous quarter.
Okay, not in this quarter.
So the note is repeated because these are for the 9 months. So it says during the period. And in September quarter, it said during the quarter.
Right. Okay, that's fine. And secondly, this reduction in tax rates in US, would it have any implications for us?
Yes, it will have on a positive side.
Okay. Any sense on what proportion of our profits would be coming from US in the sense taxed in US?
That would not be possible for me to share that information offhand or even at any other point of time. Let me see what is done on that. But because all our products are done close to the customers, and we are in fact expanding in USA. Alabama is the largest investment or the largest plant coming from our group. So we do have implication on the tax of local jurisdiction at all times, and hence any rate cuts will have a benefit.
Understood. And lastly, in terms of our capex, is there any material change in our capex spends for next couple of years, or broadly we should continue with what we had indicated in the past?
See, as we are saying that we are make our plants on the plants which we have started, and 4 plants, they are all in India, where the land is normally purchased by us well in advance. So our capex over a period of time is expected to taper down. But at the same time, when the new order book or new orders won't be announced, we will also let you know if we need to build more and more plants. So we look forward for that guidance. But as of now, we do see that our capex would taper down based on the existing capacities which we have.
Okay, and any
Yeah, I agree with that.
Thank you.
The existing orders that we have and the order book and all that, I think that's almost covered, barring a few expansions here and there. But please don't rule out new orders, which we'll be announcing in the next 2 months or so.
Sure. Okay, sir. Thanks and all the best.
Thanks.
Thank you. The next question is from the line of Chirag Shah from Edelweiss Securities Limited. Please go ahead.
Yeah, thanks for the opportunity. Sir, I had a question on China. Given that our presence in China now with SMR, SMP, and also PKC, have we been able to penetrate the domestic OEMs in China, or we are still largely with the foreign joint ventures in China? And how do you look at that opportunity?
Great question, Mr. Chirag. The thing is, China is a difficult market for non-Chinese companies. So PKC has a different strategy than SMP and SMR. In SMR, we have SMR and SMP. We are focused on international OEMs. In PKC, I think Pankaj will elaborate further. We have 3 joint ventures, and all 3 joint ventures are with the largest truck makers in China. So that's a different way of thinking. We welcome that as well. We think that it is difficult to penetrate by yourself with the existing passenger vehicle and the commercial vehicle manufacturers. So you have to find out new and different ways by which you can do that. And we are open to every aspect of it. We are talking to a few of our collaborators. If there is something possible, definitely we will not mind. But at the end of the day, as I said, we will pursue our customer focus. We will keep on focusing on our customers. And if the customer asks us to do something, we will definitely do it in China also. So probably that's the best answer I can give for your question. I hope it satisfies.
Yeah, sir. Yeah. And sir, follow up on capex I had. So is it possible to indicate what is the kind of maintenance capex that we generally spend across businesses at aggregate level? So one would be the growth capex that we may be, and one would be the maintenance capex. So Mr. Gauba, if you can just help us understand what kind of maintenance capex generally we spend, ballpark range?
I think, Chirag, sir, if we look at SMRP BV, we have been indicating almost like 60% plus capex is going into the brownfield and the greenfield projects consistently. So you have the historical perspective. And on the PKC or MSSL, the wiring harness business, capex is minimal. The major capex which goes into is into a land and building which do not require a replacement. So all the expenses to maintenance are charged as repairs and maintenance to the building. So therefore our maintenance capex, which is capitalized, is very minimal. Of course, we do have an expenditure which is charged to revenue account on account of maintaining.
Fair point, sir. So this was really helpful, and all the best.
Thank you.
Thank you. The next question is from the line of Hitesh Goyal from Kotak Securities. Please go ahead.
Yes, sir. Thank you for again taking my question. Actually, the line got cut, so my question was not answered. I just wanted to understand how the contracts of suppliers, like you work with OEMs in terms of raw material pricing, because because I think when suppliers bid for contracts, there is some pricing of the part that you'll give, and then there'll be productivity improvement that the OEMs ask every year, right? So can you just tell us something about how this works actually in terms of with OEMs?
So I think all the contracts that we have, by and large, are lifelong contracts. The basic productivity improvements and all that thing is already fixed at the time of giving the order. So if the order is for 5 years, then 5 year whatever productivity bonuses we have to give, we give back. As far as the raw materials are concerned, depending upon the customer, it's negotiated with them. What percentage of the up or down, what happens, and then when will it be settled? We have over 300 customers, and to generalize it would give you the wrong thing. So I really wonder if how to answer this question. But these are all contracts. These are things which are already pre-decided. So it's not like a vegetable market that every year you sit down and you discuss the pricing and all that. So all the contracts that we have, by and large, Pankaj, correct me if I'm wrong, in the wiring harness side, are actually lifelong contracts of that particular model. And please don't forget that as the car is changing, in fact, if you take an average car, suppose it started 1st of January 2018, and by the life end, say, 1st of January 2023, they probably, Pankaj, would be having over, say, 400 engineering changes, maybe more? Pankaj, what do you think?
Yeah, that's right, sir. So there are...
At least 400, 500. So every engineering change is also an opportunity, So,
yeah. Great, sir. That's what I wanted to ask, actually. That's what's very helpful. Just, clarification on that. So basically, what you're saying is that basically margins improve because the technicality of the product goes...
We don't guide on margins. We
Hello.
don't guide on margins. We guide on growth. We don't guide on margins.
So so return on capital employed improves as the technicality of the product improves, or the engineering of the technicality of the engineering is much higher on the new product or the refresh, rather than any operating leverage benefit that may come in.
So operating also there are benefits. Why do you think there are not operational benefits? But we do a calculated thing and give it back to the customer, no? Because see, 80-85% of the car is produced by us vendors. As suppliers. If we are not going to give them productivity benefits and all those things, how will the car maker be able to survive? And he's going to spend a lot of money in new cars, new models, and new things like that. So it's, in a Punjabi term, it's called "you scratch my back, I scratch your back." So kind of helps each other.
Great, sir. Thank you for answering the question.
Thank you. The next question is on the line of Bhavesh Jain from IIFL Wealth. Please go ahead. Bhavesh Jain, your line is unmuted for questions. Please go ahead.
I think we'll skip to the next one since he's gone.
Just a reminder to our participants, anyone who wishes to ask a question at this time, they may please press star. We have the follow-up question from the line of Sonal Gupta from UBS Securities. Please go ahead.
Hi, good afternoon, sir. Thanks for taking my question again. Sir, so just, I don't know if this was asked because a lot of people like me also got disconnected. So, but just to there is a slight postponement in the Keshkamet plant as well as for the Tuscaloosa plant, really for US. So, I would think this is because of the customer program delays or whatever. So is there anything to...
No. Don't look at it like this. See, I'll tell you something. On an average, a new car model would cost the car maker something like 1.5 to 1.8 billion US. So he can't really say that on the 1st of January 2018, I'm going to start production. So everybody's plant should be ramped up by then. So what happens? There are multiple builds that are happening. The first build may be of just 2 cars. Then they make the next listing of 10 cars. Then they evaluate the cars, evaluate the parts, see what the fittings are, things like that. So a car is a marriage of something like 30,000 parts coming together. So it's not a telephone which is on an electronic board or something like that. So my this thing is that every plant we set up is actually 8 to 9 months at least before the start of full production. Then it starts to ramp up. They'll make 100 cars per day. Then they'll make 200 cars per day because they have to train their workforce also. We people, all our vendors, almost 7,000-8,000 which are connected to that car, also have to train our workforce. The quality has to be checked. Everything has to be done. So it's not a thing like, it's like a shop and we start off on one day. Car making is very serious business. Does that answer your question?
True, sir. No, I mean, to some extent,
no?
yeah.
Okay, go ahead.
No, so just want to understand, I mean, like, so this...
There is no delay. It's just that we have already inaugurated the plant. The Prime Minister of Hungary inaugurated our Kecskemét plant. It's such an important plant. And Tuscaloosa, we're going to inaugurate it on the 26th of April. But the production, Gauba, correct me if I'm wrong, Kecskemét will, full production will start somewhere around the first quarter or the fourth quarter?
Quarter 1 of 1890.
Of quarter 1 of 1890 for Kecskemét. And US will be even further.
Q3.
Huh?
Yeah.
Q3 yeah. So the plants have to come up that much before. You've got to set all the things. There is something known as PPAP. PPAP is Advanced Planning of Control and things like that. And then the whole car goes for homologation.
No, so why I was asking this question is because if you look at the Q1 presentation, you talked about Hungary from Q4 of this year and Q1 of next year, Q1 FY19 was the Tuscaloosa plant. So those both have now in the Q3 presentation been postponed a little bit. So that's why I was asking this question.
No, the thing is that we probably are reacting to what the customer is telling us. So the customer also has to look at 3,000 suppliers and what they are going to go through. So whatever is concurrent is what we tell you. We don't change the date.
Right.
Whatever the customer tells us is what the latest information is. We give it to the investors.
Sure, sir. That's helpful. And so, I mean, the second question again related to the startup costs. I mean, I understand that once these plants sort of begin commercial production, you will stop reporting or breaking out the startup costs. But I mean, my general understanding is that clearly the first year of operation, like you pointed out, you will slowly ramp up, and even Mexico, I think we are expected to probably reach optimal utilization levels only by June this year. So the first year is potentially still continues to be a very limited profitability exercise, right? I mean, is that understanding correct, right?
Yeah, it all depends upon the car maker, what the car maker has, what challenges he has, and things like that. For Motherson, we have to react exactly to what the customer tells us. What problem the customer is facing, we really can't guide you on that because honestly, we ourselves sometimes don't know about it. We just get the dates which the customer is telling us. He tells us which month, what production, and we then try and make that also profitable, no matter how much the gap between the production is. So why he's changing, what happened, really very difficult for us to follow. But Pankaj or Vaman, do you want to add anything on this? Or?
Yeah, Papa, I think you concluded it with a statement, but it's plants do take one complete year to get into full ramp up. So definitely there is a delay in that sense, but to realize everything that you wanted to, and then at the same time, other plants are going through refreshes and a lot of those things. So only with SMP have we given you the startup cost. Otherwise, in SMR, even though there are new plants coming up, in MSSL new plants coming up, we are not really doing that. So this is only for you to understand that the huge order book that we have, how it's progressing, and as you know, you got the last order book, and also that's at a record level. So you can appreciate that it's a concurrent thing. It's a moving thing. New programs are coming in. So don't generalize on that one exact quarter. The plant does take a full year to get into the full speed and launches.
Yeah, and I think one important thing for us to reiterate, though we have reiterated for the last 2 quarters definitely, is that the 3 plants of SMP will add €1 billion to the top line of SMP. So please understand that it is important for you to know that what is happening on the startup side, what is the normal cost and things like that. We are not treating our accounts any differently. We are writing off every single cost. But the reason you people asked us that, no, why don't you show startup costs a bit differently, is because you would see a lot of fluctuation quarter on quarter. So what we are doing is we just show you that amount, but believe me, all of it is written off because of very conservative policies which we follow. Goba, can you elaborate on that?
That is the point which I would like to add, and you have very correctly added. As far as we are concerned, for us, it is a part of the consolidated P&L account. You do have a question why the expenses are gone up and all that. So in some way, it gives you an explanation. But if there are no revenues, yet we have charged this to P&L account, and we are fine to absorb this as part of ongoing process. And you have to wait when the revenue start kicking in, and we will have a raw material consumption as well as these costs being absorbed by such revenues.
And if there is a majority consensus that we should not show startup costs, we won't. We are very happy because our costs are going to come down, profitability will go up.
No, sir, I think more information, the better it is. So.
Gopa would be very happy because he's going through nightmares trying to segregate the startup costs and all that. See, startup costs, there's a lot of traveling that takes place also because people are going from Germany to USA, Germany to Mexico, Germany to Hungary. All these things, it's quite a job to set up a plant like this. So, but anyway, if the consensus. You guys tell us not to tell us the startup cost. We are okay with that. We actually never wanted to.
Right. I hope you don't. But sir, just last question on Brazil. Really speaking, I mean, like the last year, it was a bit of a hot spot for us, and now the market has recovered.
Still is. No, it's not recovered. Still is. What Pankaj was telling me, Pankaj, please correct me if I'm wrong. What I understood from Pankaj was that the American shortage of trucks, because of production, this thing in America, a lot of these Brazilian trucks are going into US because the manufacturer is the same. So they were actually transferring trucks over. So in that sense, Brazil seemed to start also perk up a bit. One could see green shoots.
Yeah, that's right. For us, I mean, in PKC, yes, we saw good growth from the truck makers and primarily driven by the exports.
Okay. No, sir, my question was more from a SMP standpoint. Are we seeing any improvement on the Brazilian side because that's been one of the hot spots?
No, there is not much improvement there. But as I said, we have appointed a new COO of Brazil. And let's hope his work will show in the coming quarters.
Thank you. We have the next question from the line of Puneet Chadda from HSBC. Please go ahead.
Yeah, hi, good evening. Just wanted some more color on what's happening on the PKC. Before you guys took over, they were talking of, third JV as well. So is that happening, and how is the integration going there?
Pankaj?
The third JV was already done. So there are 3 JVs in China, There is one which is with Wakai, which supplies to Photon and others. There is another JV which we talked about, the second JV, which has given full sales in this quarter. That was JAC. And then the third JV which we had signed was with Zhengao. We have a minority share. We are 40%, and it's the associate accounting which supplies to Dongfeng. So it is slowly taking off. So all the three JVs are in place.
Okay. With they talked about 30% market share. Is that also the case right now?
Yeah, we are moving. That's the direction in which we are moving. So that's how it was that with Zhengao also. So we started supplying to Dongfeng, which is a major truck maker for the heavy-duty trucks.
Okay. And any color you can give on the integration part with PKC? I know it's just a quarter since we last spoke, but still.
I mean, we all are working together. So as I mentioned, that we kept the PKC brand identity intact even after the company was delisted, and we are all working. It's fully integrated in the sense that the entire management. We have already started imbibing all the good practices which we all had. So there are a lot of teams which have been traveling and even now at this moment in India to get themselves get acquainted with the features. So when we meet next time, we can show you the Do 33 reports and we do for all the plants, plant by plant across the world.
Okay, that's great. Thank you so much.
I would like to just add that about in the first 6 months, we'll ask the president of PKC to go. So Pankaj is now the new CEO in PKC. So wherever we see that there is a resistance, we will be very strong and we will ensure. So Pankaj now has a double hat, but with single pay. So we have to increase his salary. But yes, he has the full this thing. So Goba also is now 100% supporting Pankaj. And PKC, for us, we are very sure that, in the coming time, you will see the real genius of PKC integration with Motherson.
Okay, that's great. Good to hear that. Thank you so much.
Operator, there's some background things happening. Can you please check? Hello?
Yes, sir.
Yeah, thanks.
Thank you. With the next question from the line of Bharat Ganini from Sharekhan. Please go ahead.
Yeah, thanks for the opportunity, sir. Actually, the call was disconnected, so maybe I just wanted to ask a question. Sorry if you have answered that. Maybe I have missed. So, is there some accounting change in this quarter? Like, I mean, as far as accounting, like JV or subsidiary, some mention was there. JV has turned into a subsidiary. So, if you can just answer that. Sorry if you have to repeat that.
Yeah, that was done from 1st January. So, because we are comparing quarter 3 to quarter 3, so we have a joint venture in Spain at SMP, CIFA, and that joint venture has been growing, and so it was decided to have a consolidation rights on that. So, from 1st January, that is being consolidated as a subsidiary. So, you have a change on the minority interest, and the associate accounting has got converted into a subsidiary accounting.
Okay. So, because of this, I mean, what's the impact on the profitability? I mean, just trying to understand, was it a significant contributor or like, is there no material impact?
No, it has grown over a period of time, but at the same time, it is neutral because, as I said, instead of doing associate accounting, you are doing a consolidation line by line. And whatever is the joint venture partner share on the profitability is removed as a minority interest. So from a EPS or from a shareholder's point of view, there is no change as far as this accounting is concerned.
Right. Thank you. The next question is from the line of Basudev Banerjee from Ambit Capital. Please go ahead.
Thanks. A couple of questions. One, sir, in your result note, you have mentioned that there was a copper price inflation of almost 28%, and hoping that bulk of that has been passed on. And at standalone level, your revenue growth reported is around 15%. So if one that implies that volume growth would have been in single digits ideally. So can you explain where am I missing? Because OEM growth across has been more than that in general.
Your copper, what percentage of copper is on wiring harness? Pankaj, this is so. Wire is about 20% of our wiring harness, approximately, generalized.
And our standalone business is not wiring harness alone, so it constitutes many other businesses. So total, if you look at the revenues within India, they grew by 19%. And even if you look at the standalone business, it grew by 17%. And the copper price we give in terms of, just to give you an idea as to how the movement of commodities have been, because as we discussed in the call earlier, that while the pass-through is there, but there is always a lag. And definitely in terms of, if you start, because we don't guide on margins, but sometimes people look the margins as a percentage. So it's for that purpose, that it is good to give you a clarity in terms of how the businesses have been moving. And the prices do get updated over a period of time. So we mentioned in the beginning of the call that it takes about 3 to 6 months.
Surely, sir, because if I see your raw mat to sales is like highest in 3 years, and similarly your EBITDA margin this quarter was lowest in many quarters. So is it primarily because of this input cost inflation, or this gross margin has led to bulk of the margin deterioration?
Sir, our business has, we are not doing only one product, so we have multitude of products going to different models and different customers. So it always moves in a band, because we also do higher level assemblies, and so lot of factors are there. There is no one particular factor which would basically show that, and that's why if you look at the way we have always guided is in terms of revenue on in terms of return on capital employed. So we have always focused on ROCE, because we are also more and more providing always high level assistance as well.
And sir, one more thing, not from this quarter specific, but from last 3-4 quarters, you can see, even if you adjust for the forex impact for SMR, overall SMR year-on-year growth has been nowadays in mid-single digit, compared to SMP has been doing much better. So just from a forward-looking outlook, how to look at SMR euro growth per se?
I can take this. Sorry, this is Vaman here. I can take this. Look, again, SMR, like Baba said, from the time that we took it over, has done more than 3.5x of where we started. We have in 8 years, we have grown significantly in other regions outside of Europe, and because consolidation is into Europe, all the other growth rates that are coming from the other geographies are looking muted because of the weakness in the euro. But if you look at individually, all the places that we have invested our capacities in, they are showing growth. It also is very short term to look at it at just at a 1 quarter, 2 quarter, even 1 year basis, because launches happen at a span of 1 year, and the ramp up takes almost a year for them to really reach full steam. There could be numerous factors, product mix, which programs that we are on, end of programs, a lot of end of programs coming. So, there'll always be, a year or a few quarters where this will happen. And this has also happened in SMR in the past. If you go through, after we took it over, there was a year where we were significantly investing in capacities, and you also saw the top line and the bottom line muted, but the growth was constantly increasing. So that's the automotive industry is a very long term play. It's not something that you can look at just over a year and come to some conclusion. Definitely, as the rates change and as the programs that we are on start applying, things will go back. There is really nothing that we turn on the opposite side. I'm happy to report that we've also won our first complete mirror replacement camera order. Even though it is extremely small, the whole shift is happening. It's in terms of numbers, it's a fraction. But more importantly, the customers are having the confidence to complete mirror replacement program. It is for a premium car manufacturer. Very small numbers. It's not even comparable to what we are doing in terms of mirrors. But the confidence of the customers is there, and it's really heartening for the teams that have been working on this, that they've been able to secure even the new